following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.
Welcome back to NinjaTrader Live. I'm your host, Tom Schneider, CMT with NinjaTrader. And on this part of the show, Traders Workshop, we like to bring in our NinjaTrader ecosystem partners to have them share their expertise and see what else is available in the NinjaTrader ecosystem. Today's no different. We have founder CEO of GoNoGo Charts, my friend and yours, Alex Cole. How you doing, Alex?
Doing very well, thanks, Tom. Always good to chat with you.
Oh, I feel the same way with you. It's like old times here. We're bringing you back. We've just done a special round of mid-year reviews through the lens of GoNoGo. Just want to let everybody know this is a recorded segment. It is being recorded the night before. So we will be focusing on the higher level charts, the dailies and the weeklies for currencies and cryptocurrencies today. So but before we do all that, Alex, can you show me or tell the viewers kind of what's the benefits of GoNoGo Charts and how you came to found the company?
Yeah, absolutely. And, we've done this throughout the past few weeks. But if you're new to GoNoGo Charts, what we've found over the years is that through an effort to understand all of the valuable information and valuable tools that there are in technical analysis, we tend to complicate our own analysis. And we do that by adding indicator after indicator to the chart, by adding things to the price panel. And before you know it, Tom, we've probably all seen those charts. We probably built them, well, at least I have, where you have so many things in the price panel and so many panels below that it becomes difficult to see price itself. And we know price, of course, is the most important thing we can look at. And it becomes difficult to see important levels. It becomes difficult to find support and resistance areas. It becomes difficult to make those kinds of sort of easy decisions because we have cluttered our chart. So having said that, we know that there is value in all of that analysis. So we wanted to keep it, and we do it by blending it in the background and then painting the chart, color coding it as it moves through trends. And so that's the core concept. The trend that you see in the price panel is the colored bars, the colored candles, and you can see that we have different colors for what we call go trends. We have weaker aqua and strong blue. And then for no-go trends, which are our downward moves, we have pink and strong purple. And then in between, when we transition between trends, we have amber bars. And those are the bars where the market is perhaps representing a little bit of uncertainty, not enough being met in the background to identify a trend in either direction. So we paint the bar amber, and we call those go fish bars because, of course, time to go long, time to go short, and the time to go fishing is what Jesse Livermore told us. And so we have go bars, no go bars, and go fish bars. And with that in mind, then we can look for, breakouts to new highs, but know that we're in a go trend, or we know that the weight of the evidence is telling us what it is. And then really quickly, we apply that same approach and methodology to all of the other aspects of technical analysis. For me, it was trend, momentum, volume, and volatility. If I could get a sense of those four things, then I would be able to have a good understanding of the technical analysis when I would meet with clients on any market and any time frame. So as well as the trend in that price panel, we blend a lot of momentum ideas and indicators into one oscillator that gives us a sense of overbought and oversold, but also gives us a sense of where momentum is relative to the trend it's in. So if we're in a go trend, then we should see momentum stay positive and above the zero line. And we'll look at how we use that zero line going forward. So, and then of course there's the squeeze, which people are familiar with, which is that grid that climbs. And then there's volume built into the chart as well when the oscillator changes color. So that's a really overview, high level of what we try to do, but we try to put all of the technical analysis that we need into a sort of fairly easy to read chart, and that's the goal.
Yeah, a lot to go through there, but I think the boiling it down to just data visualization, right? Getting the information out that we need to out of so many different factors is really what's really great about this set of indicators, really.
Yeah, that's exactly right. And data visualization, we are the original data visualization experts of the financial world, right? That's what technicians are. We put all of that information into a visual tool, which is the chart. But sometimes I think we stop a bit early. We could do more. And so that's what we try to do here and sort of change the data visualization in a way that gives us some value in when we're looking at these charts.
Exactly. So we did want to come back to the topic, which is kind of a mid-year scorecard or checkup, whatever you want to call it.
Yep.
In this case, currencies. So a lot's been going on, especially last week. But still, the charts will reflect all this fundamental action, right? We like to say that the price encapsulates all the news, all the fundamentals, all the anything particular to that market, whatever the market participants are thinking, it's being acted out in trades, right? So let's talk about the euro, and these are the euro futures
Yep.
on the CME. It's 6E. It's a September contract, and this is pretty much the year so far. Um, it looked pretty dismal for the euro for going into this year. That trend continued, but it took a little bit, right, to go
Yep.
from go to no go, and it's probably because we peaked right before the end of the year.
Yeah, and I think you said it best there, Tom. Like the fundamentals drive prices. We know this, but the price is what people are prepared to pay, having digested all of the things that they know or things that they think about where prices might go. So that price, of course, is super important, and all of that is factored in. What jumps off this chart to me is that it's been pretty choppy for most of this year. We've seen the indicator struggle to maintain a trend. But because there is not much on here, we can see that most recently, we're really testing those recent levels that have been resistance. If you look back across the chart through March, we had some highs there. We had those highs again then in early July. And this is a really significant level that if we can get through this, we may then, be able to run up to the highs that were before that at the end of last year. You talked about that spike. So given that, we haven't seen a trend persist too long in either direction this year, these are important levels, and we can see that on the chart because the price panel is relatively large. What's interesting is at the moment, we didn't go out of go colors into no-go. We saw a couple of bars of uncertainty at the end of the month, and now we've recovered to paint blue bars as the oscillator gets back above zero on heavy volume. So, fairly bullish in the last few bars. So not a surprise that we're then testing those prior levels.
And the heavy volume, you're looking at this part of this oscillator, right? The oscillator reflects volume relative to itself. Is this a lot of volume coming in, or is it under average, whatever the measure is?
Yeah.
And you can see it here in the oscillator. What's interesting to me is these inflection points,
Yeah.
as marked by the move out of overbought area, right? Overbought area here, oversold area here, overbought. Now they're not catching, nothing will catch every peak high or peak low, but it's interesting that when you see it, it's not like they show up like 3 bars later, right?
Yeah.
They show up when they move away, when they move out of overbought or oversold territory. So interesting that these are pretty well respected areas when you see them there. And again, they don't always catch the high. Sometimes they don't register at all on these lows or these highs.
Yeah.
But when they do, it might be important to pay attention to those.
Yeah, and I think that goes back to the fact that the traditional use of momentum of swing, really high velocity moves in one direction and then looking for mean reversion, that was sort of designed and sort of, I guess the innovative work was done when the market was moving sideways in a range-bound market, moving from highs and lows. And that's sort of what we've had this year. We haven't really had that persistent trend. So we've been moving from sort of swing highs to swing lows this year. And so being able to have a traditional sense of momentum, which, as you said, is we trigger these arrows when momentum has gone either overbought or oversold. We want to see that, especially when a market is moving sideways like this, because it really will tell you that the market has been extended in one direction and might come back. So you can sort of blend those two types of approaches, mean reversion with trend. I mean, in this case too, what is interesting, you mentioned there's no sort of green triangle at that last low there in June, but that's a much higher low than we had in April, May. So now we're starting to see perhaps higher highs and higher lows. So that's sort of now, is there a trend taking shape? Because we've got a higher high, we've got a higher low, another higher high, another higher low. So perhaps now we'll see breakouts above that resistance level and the trend continue. Or maybe we'll run up to overbought and get another red triangle. So, we'll have to see exactly how it moves from here.
The interesting thing about currencies too, Alex, is they don't they don't have this tendency unless there's something cataclysmic. I won't say, never say never, but
Yeah,
generally they stay within a certain relationship to each other, right? So Euro FX futures are two
yeah,
currencies, right? They're the euro and the US dollar. And barring some failure, some government collapse, those two prices will stay within a certain relationship to each other, such that it does lend itself to nice swing trading.
yeah. Certainly don't trend in the same way like that an equity can, right? Where it can go from $5 to $100 or back down to zero. So yeah, you definitely want to combine that type of momentum analysis when looking at FX rates. Yeah, for sure.
So let's go maybe to a currency maybe nearer and dearer to your heart. Here's the British pound. There we go.
Yeah, and I mean I've got a good friend in Australia, and we, you keep going back and forth with the pound and the Aussie dollar. But yeah, the pound has been a bit up and down as well. I mean, if you zoom in on that sort of last section, I guess the last 6 months or so, now we're starting to see some movement upwards, right? So this is a critical moment now. We've had a higher high and a higher low, and then
Yep.
we're seeing uncertainty now. So like we're certainly seeing market uncertainty after that recent high. And again, like you said, we get that counter trend correction icon, that red arrow, because we saw a strong move to the upside and then momentum wane. So that's us like using momentum in the traditional sense. And what we're going to look for then, as you're just hovering right over it, is as we come back down to the zero line, does that momentum oscillator hold at zero? And we saw that max GoNoGo squeeze build telling us that there was a real tug of war there between buyers and sellers. But then it was broken to the downside. So that's a real threat to the go trend, much more than if it had held and broken back into positive territory. So you combine that with the uncertainty that you're seeing with the amber bars. It's not a good look really for the go trend to continue. But we've got a lot of support at levels that were sort of, we saw some clustering of price action recently. So we're going to watch there as well. But we'll need to see that oscillator get back up to zero if there's going to be further price action to continue in the go trend.
Yeah, and we just saw, I think, a 25 basis point rate cut in the Bank of England.
Yeah.
So certainly, moving with these fundamentals, but trying to capture the extent of those moves through the technicals here. You mentioned this clustering. It makes me think, something we've talked about before is you can use other indicators, you can use other tools, you could
Yeah.
use, I don't know if this will show up too well because of my coloring scheme, but let's say I wanted to use a trend channel. And
Mhm.
so I might say, oh, here's a trend. Yeah, it won't show up very well, but it'll show up, and it breaks out, right? And you've got another trend channel, and the question is, does it break up out of this trend channel? It broke down below. I don't really care if we're in a down move already. I don't really care how far it continues to go down. I just want to know when it turns around. Um,
Mhm.
but that's a great thing is now I can start cluttering up my charts again, and it doesn't look cluttered.
Exactly. And you can do other things too, like, there's candle patterns, right? You can look for these things that might be in play over the shorter time frame, like, that bar, that candle that we're looking at right now, that looks pretty interesting to me, right? The bears drove prices down, but you can see that the bulls have brought the prices back
Mm.
towards closer to the high. You can call that, you can call that a hammer, you can call that whatever you want, but that's interesting and we can see it. And then also, Tom, like we've discussed, so many times before, the idea of multi-time frame. So if you have a more of a choppy price action on a certain time frame, you can zoom in or zoom out to get a sense of what that trend looks like on a different time frame. So all of that kind of thing you can then still do, of course. This one tends to think a little bit before it comes in, but
It does. It does.
it's tired.
Well, we'll go back. We'll go back to daily and maybe take a look at
Yeah, yeah,
another currency, Japanese yen. Right. We know that if you've been watching the currency markets, you know the story there, and based on central bank activity, this market really took off recently,
yeah,
especially over this weekend. But what just I would expect no go, just knowing the chart. I would expect no go, no go, no go. It's in a downtrend, and then at some point it turned around. What would be interesting to me when when looking at indicators is what I know about the market is there might be fundamental factors, there might be other technicals I'm looking at, and then just comparing, okay, well, where did this indicator indicate something might be changing?
yeah. And I think it goes to your point with with FX, you definitely have the fundamentals in play. Like you can't, there's not a lot, you can't really avoid the fact that if a central bank cuts rates or something happens, it's going to be affecting what you see in terms of price action. Sometimes with stocks, maybe something big is happening, but the company's so well run, it can take care of its own self and the trend doesn't change. But what's interesting then using technicals is you might have your opinion like we all knew that there was a downtrend in the Japanese yen here, but at what point do you then say, okay, well, this is going to move, but when do you then have the confidence to know it's moving? And I think that's where we can see technicals really helping us because when we get these lows, we start to see the green arrows telling us that perhaps price may struggle to go lower. Then we look at the oscillator break above zero. Then we see that there are some amber bars being painted which tells us the market's uncertain with the health of that no-go trend. Then we see some weak go colors come in, and then we see some strong go colors come in. So that sort of turn is being painted and being colored for you. And at some point, all of the whatever you're hearing and whatever you're listening to and whatever your opinion is starts to be reflected in the price, and you're told then quite concretely by the technical analysis that the environment has changed. We are now no longer in that no-go. We're in a go trend. Momentum is above zero, volume is heavy, and you can sort of see that sort of give you some sort of peace of mind, I suppose, right? Like a little bit of peace of mind that what you think is going to happen is happening, and it really helps you there.
Yeah, and looking at this, I mean, you know, for 2024, we really hadn't seen any blue bars.
Yeah,
We'd only seen aqua bars, and we have to go back to the end of last year to see those blue bars. But as we're seeing, as these blue bars kind of wane in transition, now we're in no-go territory, except for maybe three different bars, right? Or
yeah,
five different bars. We've only seen a light magenta and dark magenta throughout this whole turn, and it wasn't at the bottom that we saw the turn. It wasn't.
yeah.
It momentum takes time to change, so it's kind of confirming that idea of, okay, we're getting out of this downward trend. What evidence do you need to know? Without having this on here, I might say, well, I want to take out this high and I want to take
Yeah,
out this
yeah.
high, and maybe get rid through this gap right here, and all these things that kind of line up. And that's what's happening here. It's like, okay, well, you could do it by price, but you could also blend the indicators and see it on the chart as well.
Well, I think that's one of the beautiful things about technical analysis, just in general, is that you can have a sense of what you think might happen, but then you want confirmation, and you can, like you said, you can do it several ways. And as long as you don't overwhelm your chart with complexity, you can do it. Like if you go back to March there, where we did see the indicator attempt to go bars, what's strikingly obvious there, we didn't break those prior highs,
Right.
right? So the prior highs in February, we might see that go trend with weak bars and say, okay, well, let's take out those prior highs. And then we'll see the trend really kick on. And so that doesn't happen, and then you go on and the no-go continues. And you can see it a couple times here on the right side. The June, the sort of the highs from June were taken out while we were still in weaker bars. That one blue bar took those out. Then we saw some real sort of sideways action as we tried to take out the highs from early May that you pointed out as well. And then now once we got through those two levels, now we're seeing consecutive blue bars and obviously some serious price move. But in that period of sort of end of July, you're watching the price action do what you might expect, but also the indicators have confirmed that the environment has changed. So yeah, definitely blending traditional technical analysis with an understanding of the indicators is always helpful.
And what's interesting here too is we were anticipating something from the Bank of Japan into their announcement of hiking rates. So, that explains these doji or small body candle, right?
Yeah.
Nobody's really willing to really move the market too much, right? Because they could be wrong. We're waiting for the Bank of Japan. We think, no, you know what's going to happen, but anything can happen, right?
Right.
And maybe it's not just about raising rates, maybe it's how much. So all these things kind of factor into play, and just being ready to know that, look, your momentum is high. It's not
Yeah.
completely overbought yet, but you just need a catalyst, and the catalyst happened, and then we're still at this really high level. That's
Yeah.
amazing. So
And also
now,
at that point where you're waiting for something you think might happen, the weight of the evidence is suggesting upwards price action because we're painting go-colored bars. So you're
yes,
waiting for it to happen, but if there's a sort of a slight expectation that if something happens, it might happen to the upside because we're in go-colored bars. Now, of course, if like you said, if people had all factored in rate hikes more than perhaps we'd thought, and it didn't have that kind of effect, then the indicator would change color quickly and let you know that it was wrong, and then you'd come back down into a no-go. But the weight of the evidence at that point was suggesting a bullish move because we're in that go trend already.
right, right. I think we have room. You mentioned Aussie dollar. Let's flip over there.
Mhm.
We'll see. Now, I don't normally look at Aussie dollar, so it might take a little bit longer to come in, but here we go. A little flatter here, a little flatter than the pound.
Yeah, flatter until recently. So like this has
Right.
been, we've been talking with my friend and he was looking at these highs and looking for reasons to take action. And then of course, it really fell apart. I mean, the current candle is really interesting though, because if you know your candlestick analysis, that's pretty interesting with the length of that wick and price coming all the way back up to the top. So but yeah, a really big move over the last couple of weeks, which was what we've been talking about, and looking at that on different time frames and looking at that how it compares to moves in the past. But yeah, up until that point, definitely a little bit more compressed price action. But you can see that if we if we close where we're closing on this bar, like we haven't taken out that prior low, so
Right.
we intra-bar did, which was obviously a really big move, but there's some support definitely from April.
Yeah, and what's interesting is this downtrend. To me, what's interesting is when this was getting out of go territory, right? When it goes to teal, we got an increase in volume.
Yes.
And
Yeah.
then it plateaued a little bit, right?
Yeah.
Okay. That's when we got a little bit of a go fish, right? And then it switched over back. Well, it switched back to no go. It was in go territory here, go fish. Now it's no go, and the volume's coming back in.
Yeah.
So interesting to me. That's kind of interesting behavior. But you're right. I think this is key. Where this closes today, which as we're looking at this chart, it's Monday night. It's almost session end. So this is certainly looking finishing a little more bullish than it looked earlier, for sure.
Yeah, definitely.
Maybe we could take a look at micro Bitcoin while we have a little bit of time. And micro Bitcoin today was down over 20%.
Yeah,
Kind of probably resembling a lot of the other currency futures, right? Which
yeah.
explored some more depths, 50,000. Now we're back at 54, which was a target wick back in July. Uh, what do you think of this chart, Alex?
So Bitcoin's been frustrating, I think, for a lot of investors and a lot of us because I think a lot of people expected it to go again once it sort of was testing or threatening to test those prior highs. But you can see quite sort of significant failure at those levels back in May, June, and then this time around, we didn't even get close to testing those prior highs. So this most recent run where we saw all that amber go fish and that attempt to go back into a go trend, we aren't really, we aren't up there where perhaps we would have liked to have been for that to have been a serious threat. And then, of course, it only held for a couple of bars and back to amber go fish, break below the zero line and a no-go. So very sort of, weight of the evidence showing that this is, we've been making slightly lower highs, slightly lower lows. If you sort of, like you said with your channel, if you draw a trend channel through all those tops, and then you threw all of the sort of the lows, that looks like a trend channel that's sort of slowly meandering lower.
Yeah.
So again, is this a break below? Is this going to move more? Or like you said, depending on how far back up this climbs, perhaps we stay inside the channel. But definitely we'll be watching because we've moved back into a no-go. Momentum is below the zero line. Volume is heavy. So, interesting.
Yeah, interesting is right. And we know that Bitcoin can move in big moves, right? I mean, the low today was
Yeah.
right around 49,300 and we were up as high as 10,000 higher than that.
Yeah.
That's just crazy numbers. But
But if you look
yeah.
at the image, it looks just like a chart,
Yeah, right. Yeah, you could hide these numbers and you
Yeah, you
couldn't
can
tell,
hide the numbers.
what chart are we looking at, right?
Yeah, yeah.
Alex, it's been great as usual to have you on. We'll have you on again shortly. We'll probably talk about some more relevant features, maybe do some more intraday analysis.
Yeah.
But where can people find you if they want to learn more?
Yeah, thanks. www.gonogocharts.com or info@gonogocharts.com. Shoot us an email.
Excellent. And again, always great to have you on here. Hope everything's going well in your neck of the woods, staying dry, staying warm.
Staying very warm. It's been brutal these last couple of weeks, but we're doing all
Well,
right.
well, maybe Tropical Storm Debbie will cool you off as it's supposedly coming up the East Coast. But anyway, we can hash that out next time we talk.
Thanks, Tom.
All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.